I learned this lesson the hard way. The market doesn't reward intelligence, effort, or speed. It rewards waiting. And if you hurry, it punishes you without mercy. I want you to imagine this. For a moment, you're staring at a chart. Price is moving fast. Your heart rate rises. Every candle feels like it's leaving without you. Your finger hovers over the buy button. And in that exact second, the market is watching not your strategy, not your indicators, but your impatience. Because impatience is visible in price, and the market always collects its tax from those who rush. I'm speaking to you not as a theorist, but as someone who's lived inside this mistake. I've chased breakouts too early. I've entered before confirmation. I've convinced myself that speed was skill. But what Nicolas Darvas discovered then, what Jesse Livermore knew decades before him, is that the market is not a place for quick hands. It's a place for still minds. Darvas wasn't a Wall Street insider. He wasn't glued to a terminal. He was a dancer traveling the world, trading between performances, and that distance, both physical and psychological, gave him a dangerous advantage. He learned something most traders never do. The more you wait, the more the market does the work for you. Livermore said it clearly. It was never my thinking that made the big money. It was my sitting. That line sounds simple, almost lazy, but inside it is a brutal truth. Most losses don't come from bad analysis. They come from action taken too soon. From the need to be involved, from the illusion that if we're not clicking buttons, we're not trading. In this documentary, I want to slow you down intentionally because the market moves fast, but mastery moves slow. And the paradox is this: the trader who appears inactive is often the one making the most. Effortless money. Today's title isn't motivational fluff. The market punishes hurry. How waiting creates effortless profits is a psychological warning. The market has no sympathy for urgency. It doesn't care about your schedule, your bills, or your excitement. When you rush, you reveal weakness, and weakness is expensive. Darvas understood that price must prove itself before you participate. Livermore understood that money is made by waiting for the line of least resistance. Both men arrived at the same truth from different paths. The market pays patience premiums and charges impatience penalties. As I set the stage here, I want you to reflect honestly. How many of your losing trades were truly unavoidable, and how many were simply early? Enter because you felt you had to do something, because silence felt uncomfortable, because waiting felt like missing out. This story isn't just about charts. It's about human behavior under uncertainty, about the internal pressure to act, about the fear of being left behind, and about the quiet power that comes from letting the market come to you instead. Be honest with yourself. How many times has impatience cost you a good trade? Comment below. To early or I waited. As we move forward, I'll take you deeper into the inner conflict every trader faces when price starts moving without them. The emotional battle between discipline and desire, between waiting and chasing. Because before you can profit from patience, you must first understand why waiting feels so painful. And that's exactly where we're going next. The most dangerous moment in trading isn't when the market is crashing, it is when it is moving just enough to tempt you. This is the paradox that lives inside every trader. On one side, you know waiting is logical. You've studied enough charts. You've heard the rules. You understand that confirmation matters. But on the other side, there's a quiet, relentless voice whispering, if you don't act now, you'll miss it. And that voice doesn't sound emotional. It sounds reasonable. That's what makes it lethal. I've felt this conflict thousands of times. Price begins to rise. Not a breakout, just a suggestion of one. Volume ticks up slightly. Twitter lights up, YouTube thumbnails scream opportunity, and suddenly, patience feels like weakness. Waiting feels like fear disguised as discipline. This is where the market sets its trap. Jesse Livermore warned about this long before screens and algorithms existed. He said the human mind is not built for speculation. It craves certainty where none exists, and when certainty is unavailable, it creates urgency instead. Urgency becomes a substitute for clarity. Nicolas Darvas faced the same battle, but his environment forced him to confront it. He couldn't constantly interfere. He couldn't babysit trades. He had to wait for price to prove itself by building boxes. Those boxes weren't just technical structures. They were psychological boundaries. They protected him from his own impulses. Here's the paradox. The market rewards those who wait, but it emotionally punishes them while they wait. It tests you with partial moves, false starts, near breakouts. It creates just enough motion to make inactivity feel irresponsible. And this is where most traders break, not because they don't know what to do, but because they can't tolerate doing nothing. I want you to think about how waiting feels in your body. Tight chest, restless hands, constant chart refreshing. This isn't a lack of strategy. This is unresolved emotional tension. The market becomes a mirror, reflecting your discomfort with uncertainty. Livermore understood this deeply. He knew that traders lose money not when they are wrong, but when they refuse to wait for being right. He talked about the line of least resistance not as a price concept, but as a mental state. When the market is truly ready, entry feels calm. Clean, almost boring. If you feel rushed, you're early. Darvas's greatest insight was realizing that boredom was not a problem, it was a signal. When nothing was happening, nothing needed to be done. But modern traders have been conditioned to believe constant action equals progress. Screens, alerts, and notifications amplify this pressure. The market is open, so you feel like you must be open too. This creates the inner conflict. If I wait, I feel left out. If I enter early, I feel in control. But control is an illusion. Early entries don't give you control, they give the market control over you. Once you're into soon, every tick becomes emotional. Every pullback feels personal. And now you're no longer waiting for price, you're hoping. Livermore despised hope in trading. He called it a disease, because hope is what appears when you act without confirmation. When you hurry, you replace probability with desire. The market knows this. It moves just enough to trigger you, then pulls back not to hurt you, but to expose you. To ask a simple question, can you wait, or must you participate? When price starts moving without confirmation, what do you feel first, excitement or anxiety? Comment below with one word. This inner conflict is not a flaw, it's the battlefield. And in the next section, we'll go deeper into the specific psychological trap that impatience creates and why once you step into it, even good setups start failing. The market doesn't trap you with complexity, it traps you with familiar feelings. The core problem isn't that traders don't know how to wait. It's that waiting exposes something most people spend their lives avoiding: uncertainty without action. When you enter early, you're not making a trading decision, you're making an emotional escape. I've seen this pattern repeat endlessly in myself and in others. Price starts to form a structure, but it's not complete. The box isn't finished. The breakout isn't real yet. Still, the mind starts negotiating. If it breaks, I'll already be in. I'll add later. I don't want to chase. These thoughts sound strategic, but they are rooted in fear of being late, fear of missing the move, fear of looking foolish. This is the psychological trap, confusing anticipation with confirmation. Jesse Livermore warned against this exact mistake. He said the market never gives you all the signs at once. It tempts you with partial information, and your job is not to predict the rest, it's to wait until the picture is complete. Most traders can't tolerate incomplete pictures. They want to feel smart early, even if it costs them money later. Darvas discovered that anticipation is expensive. Every time he tried to guess a breakout, he paid tuition. His real profits only came when he stopped guessing and started verifying. The Darvas box wasn't just a pattern, it was a rule against early participation. Price had to break out and stay out. Anything else was noise. But here's where the trap tightens. Once you enter early, your psychology shifts. You stop evaluating the market objectively. Now you're managing your position, not your decision. Pullbacks feel threatening. Consolidation feels like failure. And instead of waiting for confirmation, you start looking for reassurance. Livermore said this is when traders begin to average down, move stops, and rewrite rules. Not because the setup changed, but because their emotional state did. The hurry created vulnerability, and vulnerability demands relief. That relief usually comes in the form of rationalization. Another layer of this trap is identity. Traders want to believe they have good instincts. Early entries feed that identity. If price spikes immediately, you feel brilliant. If it doesn't, you feel unlucky, not wrong. This prevents learning, because impatience doesn't feel like a mistake. It feels like courage that didn't get rewarded, but the market keeps records. It doesn't care about your intentions. It only responds to timing. Darvas learned to treat time as a filter. If price couldn't hold above resistance, time would expose the lie. If it could, time would confirm the truth. Waiting wasn't passive, it was diagnostic. Every extra price stayed inside the box strengthened the eventual breakout. The psychological trap is believing that action reduces risk. In reality, early action increases exposure. When you hurry, you give the market more time to prove you wrong. Livermore's biggest losses came when he tried to force trades during unclear conditions. His biggest wins came when he waited for the market to align so clearly that hesitation disappeared. That clarity only arrives if you allow time to do its job. Have you ever entered a trade just to get it over with? Comment yes or no below. In the next section, we'll step directly into Livermore's mindset, how he viewed waiting not as discipline, but as a strategic weapon, and how that perspective can change the way you experience every trade. Jesse Livermore didn't believe traders lost money because they were wrong. He believed they lost money because they refused to wait for the market to be right. When I first truly understood Livermore's thinking, it changed the way I looked at time on a chart. He didn't see time as something to endure. He saw it as a weapon, a filter, a test that the market had to pass before he committed capital. And this is where most traders completely misunderstand patience. Patience is not about self-control. It's about alignment. Livermore never chased movement. He waited for inevitability. He wanted the market to reach a point where resistance weakened so clearly that price almost had no choice but to move. He called this the line of least resistance. And here's the critical insight. If you feel rushed, you are not at that line yet. Darvas arrived at the same principle visually. His boxes represented areas where the market was undecided. As long as price stayed inside the box, the verdict wasn't in. Livermore would say, "Why argue with the jury before they deliver the decision?" One of Livermore's most misunderstood quotes is, "The big money is not in the buying or the selling, but in the waiting." People read this as motivational wisdom. It's not, it's tactical. Waiting allowed him to avoid low probability zones entirely. He wasn't trying to be involved. He was trying to be right with size. Livermore knew that markets move in phases: accumulation, expansion, distribution, decline. Most traders try to participate in all of them. Livermore only wanted the expansion phase, the part where price accelerates with minimal resistance. That phase cannot be forced. It reveals itself only after time eliminates doubt. Darvas respected this deeply. His rule was simple, but brutal. No breakout, no trade, not almost, not about to, not look strong. Price had to close above the box and then hold. Time confirmed strength. Anything less was impatience disguised as analysis. What Livermore understood and what modern traders forget is that waiting keeps your psychology clean. When you enter late, but correctly, pullbacks don't scare you. You're aligned with momentum, not fighting it. You're trading with confirmation, not hope. Livermore also knew something uncomfortable. Most people trade to feel alive. Action feels productive. Waiting feels empty. He rejected this instinct completely. He said boredom was a sign he was doing things right. If nothing met his criteria, he did nothing and considered that a victory. Think about that for a moment. No trades wasn't failure. It was discipline rewarded with capital preservation. Darvas echoed this when he said his biggest breakthroughs came when he stopped forcing trades. During unclear periods, Livermore's perspective removes ego from trading. You are not there to prove intelligence. You are there to extract money when the market makes it easy. If it's not easy, it's not time. Do you feel more confident when entering early or when entering after confirmation? Comment which one feels harder for you. In the next section, I'll bring this philosophy to life with a real-world story, one that shows exactly how waiting transforms not just profits, but emotional stability in trading. The trade that taught me patience wasn't my biggest winner, it was the one I almost took to early. I remember the chart clearly. A strong stock, tight consolidation, clear resistance. On paper, it was perfect. The kind of setup traders brag about before it actually works. Price was pressing against the top of the range, volume creeping in. Every instinct I had was screaming, "This is it." In the past, I would have entered without hesitation. I would have convinced myself I was being aggressive or proactive. But this time, Darvas was in my head. No breakout. No trade. The box wasn't broken yet. So I waited. That waiting was uncomfortable. Price teased the level again and again. Small pops above resistance, then quick rejections. Each rejection felt like a personal insult to my discipline. I could feel the urge building, the desire to just get in and stop watching. This is where most traders fail. They don't enter because the setup changed. They enter because watching is painful. Livermore would say this is where the market tests your seriousness. It offers you excitement instead of opportunity. And if you accept the excitement, it charges you tuition. Eventually, something shifted. The breakout came, but not explosively. Price closed above the range and stayed there. No drama. No adrenaline. Just quiet confirmation. The next day, it held again. That's when I entered. And here's the part that changed everything. The trade felt easy. Pullbacks didn't scare me. Volatility didn't shake me. I wasn't watching every tick. The market wasn't fighting me, it was carrying me. Compare that to the alternate reality, the version where I entered early. I know exactly how that story ends. I'd be stressed on every dip, questioning my stop, searching for bullish tweets, managing fear instead of managing risk. Darvas's box did its job. It filtered out my impatience. It forced me to wait until probability shifted in my favor. Livermore's lesson did its job too. Enter when the market makes it obvious. The result? A clean trend. Higher highs. Effortless profits, not because the market was generous, but because I was aligned. This story isn't about one trade. It's about a pattern. Every time I've waited for confirmation, my emotional state improved. My losses shrank. My wins expanded. Every time I rushed, the opposite happened. Have you ever watched a setup work perfectly after you exit the door before you entered? Comment below what you felt in that moment. In the next section, we'll explore the emotional low point, the moment when waiting feels unbearable, and why pushing through that discomfort is where real transformation begins. The hardest part of trading isn't losing money, it is doing nothing. While opportunity appears to pass you by, there is a specific emotional low point every disciplined trader reaches. It's not after a loss. It's not during a drawdown. It's right in the middle of waiting when price is close, but not close enough. When every part of you feels like discipline is turning into stupidity. I remember sitting through sessions where the market moved just enough to mock me. Stocks breaking out without me. Crypto ripping while I stayed flat. Other traders celebrating wins while my account balance didn't change. That silence was louder than any loss. This is where impatience becomes dangerous, because the mind starts rewriting rules. Maybe confirmation isn't necessary. Maybe this time is different. I've waited long enough. This is the turning point, the moment where most traders abandon what they know to be true in exchange for emotional relief. Livermore experienced this repeatedly. He wrote about long periods of inactivity where he questioned himself, not his method, but his relevance. Was he missing something? Had the market changed? He learned that these doubts were signals, not warnings. They meant he was close to the real opportunity, but not there yet. Darvas felt this too. As a traveling dancer, he'd sometimes go weeks without placing a trade, watching prices move inside boxes, doing nothing. His breakthrough wasn't technical, it was emotional. He realized that discomfort wasn't a problem. It was proof that he wasn't interfering. The emotional low point is where waiting transforms into power. If you can sit through it, something shifts. You stop needing the trade, and the moment you stop needing it, you're finally ready for it. I noticed this in myself. The longer I waited, the less reactive I became. The market's noise faded. I wasn't chasing candles anymore. I was observing structure. Waiting didn't feel like deprivation, it felt like positioning. Livermore said that when a trade is right, it doesn't argue with you. It doesn't rush you. It arrives calmly. But you can only recognize that calm if you've survived the emotional storm of waiting. Most traders never do. They mistake discomfort for danger. They enter trades to escape the feeling, not to capitalize on probability. This section of the journey is uncomfortable by design. It strips away impatience. It humbles ego. It forces you to confront the truth. Trading success has very little to do with how often you trade and everything to do with when. What's harder for you, missing a trade or waiting through uncertainty? Comment honestly below. In the next section, we'll reveal the breakthrough rule, the specific Livermore-style principle that turns waiting from pain into profit. The moment trading became easy was the moment I stopped trying to start trades and started letting the market invite me in. Jesse Livermore's breakthrough rule was brutally simple, and that's why most traders ignore it. He refused to act until the market reached a point where hesitation disappeared. If he had to convince himself, the trade was already wrong. This wasn't intuition. It was discipline trained through loss. Livermore learned that a true opportunity announces itself through ease. Price doesn't struggle. It doesn't stall at obvious levels. It moves as if resistance has vanished. That's the line of least resistance. And your job as a trader is not to predict that line, but to recognize it when it appears. Darvas turned this idea into structure. His role was clear. The breakout must occur, and then price must remain above the box. No immediate re-entry, no false pop. Time had to validate strength. This removed emotion entirely. Either the rule was satisfied, or it wasn't. Here's the breakthrough. Waiting is not passive, it is a test of truth. When you wait, you allow weak setups to fail without costing you money. You allow strong setups to reveal themselves fully. You let time expose deception. Livermore said that markets are never wrong, opinions are. Waiting removes opinion. It replaces belief with evidence. I noticed that once I adopted this rule, my trading frequency dropped but my confidence skyrocketed. I wasn't guessing anymore. I wasn't hoping. I was responding. Every trade felt justified before entry. This rule also protects your emotional capital. When you enter after confirmation, you're aligned with momentum. You're not defending a position, you're riding one. Most importantly, this rule changes your relationship with missed trades. You stop chasing because you trust that real opportunities will wait for you, and they do. Have you ever felt a trade was too obvious and still hesitated? Comment what stopped you. Next, we'll bring this rule into the modern world, how today as traders can apply Livermore and Darvas principles amid noise, speed, and constant information overload. The market is faster than ever, but human psychology hasn't evolved at all. Modern traders like to believe they're playing a different game than Livermore and Darvas. We have instant execution, real-time news, social media sentiment, algorithms, alerts, scanners. But strip all that away, and the core struggle is identical. The urge to act before clarity arrives. If anything, modern markets punish more aggressively. Information moves instantly, which means temptation moves instantly. Every small price movement is amplified by noise. A 1-minute candle becomes a narrative. A rumor becomes a thesis. And patience feels outdated, almost irresponsible. But Livermore's edge was never speed. It was selectivity. And Darvas's edge was never access. It was distance. Modern traders can apply this by deliberately creating friction between impulse and execution. Darvas did it by traveling. You can do it by rules. For example, no entries without a higher time frame close above resistance, no trades on the first breakout candle. Mandatory waiting periods after signal appearance. These aren't restrictions. They're psychological shields. Livermore would say the market's job is to move. Your job is to wait for the right move. That's harder today because everything is designed to make you react. I found that the more rules I added around waiting, the clearer my trades became. Fewer decisions, less stress, more follow-through. Darvas traded part-time and outperformed full-time professionals. Why? Because he only acted when price screamed. Silence didn't bother him. Modern traders must relearn this. You don't need to catch the move. You need to catch the middle. That's where trends pay. What distracts your patience most? Charts, news, or other traders' opinions? Comment below. In the next section, I'll give you a step-by-step framework to implement this waiting-based approach in your own. Trading practically, not theoretically. Patience becomes powerful the moment it turns into a process. Most traders fail at waiting because they treat it like a personality trait. I'm just not patient. That's an excuse. Darvas and Livermore didn't rely on temperament, they relied on structure. And structure can be built. Let me walk you through a practical, step-by-step framework that turns waiting from a vague idea into an executable system. Before the market opens, decide where you will not trade. Darvas used boxes. You can use ranges, VWAP zones, or key resistance levels. Inside these zones, you are forbidden to act. This removes debate. Livermore avoided markets that were directionless. If the line of least resistance wasn't clear, he stepped aside. No clarity, no trade. No entries on first touch. No entries on first breakout. Price must hold. This single rule eliminates most false moves. Time is the filter and patience hates most, and that's why it works. Livermore analyzed calmly and executed decisively. If you are analyzing while entering, you're late. Waiting happens before execution, not during. Decide in advance what conditions invalidate your urge. Write them down. Darvas trusted written rules more than feelings. This is critical. Waiting is successful even if no trade happens. Livermore measured success by discipline first. Money followed. When you implement this, something changes. You stop chasing, you stop forcing, and trades start feeling obvious. Which step do you struggle with most? Comment the number below. In the final section, we'll bring everything together with a cinematic close while waiting isn't just a tactic, but a trader's identity. One day, you'll realize the market didn't change, you did. You'll look back at your old trades and see a pattern that was invisible at the time. The losses weren't random. The stress wasn't necessary. The struggle wasn't noble. It was impatience wearing the mask of ambition. Nicolas Darvas reached this realization when he stopped trying to participate in the market and started letting the market qualify for his money. Jesse Livermore reached it when he accepted that waiting wasn't wasted time, it was the work. And when that shift happens, trading becomes quieter. You stop feeling rushed. You stop needing to be right. You stop reacting to every candle like it's a verdict on your intelligence. You begin to understand that the market only pays those who respect its timing. The market doesn't reward effort. It rewards alignment. It doesn't care how badly you want the trade. It only responds to readiness. Waiting creates effortless profits because effortlessness is a sign of correctness. When a trade is right, it doesn't argue with you. It doesn't rush you. It doesn't require emotional management. It unfolds. Most traders will never experience this not because it's rare, but because it requires them to sit with discomfort long enough for clarity to arrive. But if you can truly wait, you gain something more valuable than profit. You gain trust in your process, calm in your execution, and consistency in your results. This is the Darvas way. This is the Livermore way, and it is available to any trader willing to do the hardest thing in the market. Nothing. What's one rule you'll adopt to trade less but better? Comment it below and commit publicly. The market will still move tomorrow. The question is, will you be ready to wait for it?